Hi, my name is Shanti Dugar, a market analyst from MSD Financial and Investment Services. I am handling the equity portfolios around the globe, particularly in India, Australia, Thailand, and the United Kingdom. Welcome to my show on this 10th March 2024. Today I am going to present a brief analysis of BHP Group Limited and my view on the outlook of this stock. Before I start, a word of disclaimer that the analysis being presented and views expressed in this show are my personal views and these should not be construed to influence any buy or sell transactions in the stock. The viewer or recipient of this video or report should conduct his or her own investigation and analysis of the stock markets and take any decision to buy or sell any of these stocks. I would give a pause of a few moments for viewers to read the disclaimer statement. With this disclosure, let me now start analyzing the BHP stock. First, I shall provide general information about the company, then evaluate it from technical chart perspective, and then we'll do fundamental analysis through evaluation of its financials and key ratios and their trends. BHP Group Limited, as all of you know, is a mining conglomerate. It is engaged in mining and manufacturing of copper, iron ore, nickel, metallurgical coal, petroleum, and potash. It has operations in many geographies such as Australia, United States, Canada in North America, Brazil, Chile, Colombia, Mexico, and Peru in South America, Algeria, Trinidad and Tobago in Africa, and the United Kingdom. It is the world's largest mining company in terms of market capitalization, with current market cap of AUD $223 billion on Australian Stock Exchange. Now let us do the technical analysis. The stock closed at $43.95 on 8th of March, Friday. The stock has underperformed the market as its price has decreased by 2.3% since close of last financial year 2023 30th June against the ASX All Ordinary Index increasing by 9.5% since that date. The stock is currently prevailing at 3.5% lower than the last 200 days average price of $45.56. The current price is lower than the last 50 days average price of $46.545 and last 20 days average price of $44.79. Thus, the current price is below its all three support levels. The average price of the stock for this financial year since 30th June 2023 is about $45.69 and the lowest price closed at $42.72 since this date. As such, the current price is lower by 3.8% of the average and increased by 2.9% from the bottom since 30th June 2023. The peak close achieved since this date is $50.72. Thus, it has fallen by 13.3% from this peak. If we look at the long-term chart of the stock, its lowest close since 1st July 2019 was on 16th March 2020 at $25.20 during COVID-19 period. From that level, the stock has moved up by 74.4%. The peak close achieved since this date is $54.06 on 4th of August 2021. From this peak, the current price is lower by 18.7%. The average close price since 1st July 2019 is $43.16. Thus, the current price is higher than this average by 1.8% only. Now let us look at the long-term price trend of the stock in last 18 years. That is, since financial year 2005-6 onwards till date. If you look at this chart, the graph, the average of the highest closing price of each financial year during this period is $42.10. Thus, the current price is higher than this level by about 4%, which shows the downside risk in an optimistic market scenario. The average of average closing price for each of these 18 years has been $35.21. As such, we can say from this long-term average level, the current price is higher by about 20%, reflecting a downside risk in normal market scenario for the stock if the fundamentals and other things remains the same. The average of lowest closing price of each year for last 18 years has been $28.14. From this average of the lowest price of last 18 years, the current price is higher by about 36%, which reflects a downside risk in the worst case market scenario for the stock. Now turning to the fundamentals. BHP's revenue was at $81.17 billion reported in the year ending 30th June 2023. It has increased in CAGR terms by 9% in last 3 years, 6.6% in last 5 years, 1.3% in last 10 years, and 3.7% in last 17 years, that is over 2005-6 financial year. As against this, company's net profit reported in the year ending 30th June 2023 has increased in CAGR terms by 18.7% in last 3 years, 31.2% in last 5 years, 5.2% in last 10 years, and 1.9% over 2005-6 levels. EBITDA margins of the company have remained healthy, averaging at 59% in last 3 years, 56.6% in last 5 years, 54.7% in last 10 years, and 51.6% in last 18 years. Similarly, if we look at the net profit margin trends, it have averaged during the period at 30.9%, 26.9%, 18.7%, and 21% respectively. So we can see that shorter term and medium term financial performance, that is 3 years and 5 years averages, have been better than the longer term averages of 10 years and 18 years. Evaluating the liquidity and solvency of the company, the current ratio of the company is at 1.23 times as per the last reported financial year and 1.5 times as per the last 3 financial years. This is a healthy ratio from short-term liquidity perspective. From long-term liquidity perspective, debt to EBITDA ratio is at 1.2x as per the last reported financial year against average of 0.94x for last 3 years. Similarly, total debt to equity ratio is at 1.09x for the last reported financial year and average of the same for last 3 years has been 1. These ratios are reasonable and does not provide much risk of short-term liquidity and long-term solvency of the company. Turning to some ratios from investors' perspective, earning per share for the last reported financial year has been at $3.85, which is lower than the last 3 years average of $5.11 and almost same level of last 5 years average of $3.89. The price earning multiple, that is PE ratio, at current market price assuming last reported financial year's EPS works out to be 11.42 times against last 3 years average of 8.45 times, last 5 years average of 10.56 times, last 10 years average of 15.05 times, and last 18 years average of 14.53 times since 2005-6. The current PE multiple of 11.42 is reasonable in my view, considering the long-term averages and robust financial performance of the company in recent times. The company paid a total dividend of AUD 2.614 in last reported financial year of 2022-23. At current market price of the stock, it generates a healthy dividend yield of 5.9% per annum. On historical average terms, if we look at the company's dividend yield has been 8.7% in last 3 years, 8% in last 5 financial years, 6.4% in last 10 financial years, and 4.6% since financial year 2005-6. This is equivalent to an average dividend payout ratio of 73.5% in last 3 years, 84.1% in last 5 years, 97% in last 10 years, and 67.4% from financial year 2005-6 onwards. The current market cap of the company is $222.6 billion, which is 3.04 times of its book value and 3.15 times of its tangible assets value excluding goodwill. Let us now look at the how the commodity prices have been trending in last 1 year and what is their outlook. Bloomberg commodity index, if you see on the bottom right hand side, it has fallen drastically in last 1 year and continues to remain low. Iron ore prices fell by about 15% on month basis to USD 117.3 per metric ton, driven by downward trend in Chinese real estate markets. While gold remains close to an all-time high as a risk haven commodity. Copper prices have recovered a bit to USD $8,500 per metric ton from a low of USD 7,800 to 7,900 seen in November 23. With falling grades globally and increasing demand led by growth in EV industry, in my view, copper demand supply gap is likely to remain tight in long-term future. Aluminum prices have been prevailing currently at around USD 2,200 per metric ton and it has been range bound between USD 2,100 to 2,400 per metric ton in last few months. If we look at the trends in energy prices, Brent crude price is hovering around USD 80 to 84 per barrel, recovering from a low of USD $75 per barrel seen a couple of months back. Indonesian coal price index continues to remain low and has reduced drastically in last 1 year. Similarly, Australian coal price index is also at low levels, though it has recovered a bit in last 1 year or so, 1 month or so, sorry. Natural gas Henry Hub price fell by 30.7% month-on-month basis to USD $1.7 per million BTU on account of high production and high inventories. So in conclusion, we can say that considering the above fundamentals and technical analysis and a well-diversified company both in terms of products and geographically and reasonably high dividend yield, I think the company's current stock price is reasonably priced. I would say it is neither overvalued nor undervalued. And the outlook of the stock is very good going forward. Considering that commodities prices index have corrected by about 15% from the peak in last 1 year, prices may remain at these low levels in near future, though the stock has some downward risk if the commodity prices fall further from here. So my recommendation is to hold the stock if someone already owns it and wait for buying opportunity at lower level if someone does not hold any stock in the company. Happy investing. Thank you very much for watching this video. For further explanations and one-on-one discussion, you may please contact me at Shanti Dugar. Dugar.shanti68@gmail.com is my email ID. Thank you very much. Bye for now.